Hello, wonderful people. Happy Tuesday, and welcome to my QuickBooks tutorial. Today, I want to talk about statement of cash flows. I think this is one of the more complex, more advanced concepts when it comes to accounting. Everyone knows about your income statement, everyone knows about your balance sheet, but I think statement of cash flows can be kind of intimidating. But I'm going to explain kind of a broad overview, a basic understanding of the statement of cash flows. So obviously this is important, especially if you're running an inventory business, selling products. You don't want to run out of cash. And it's important to understand and monitor your cash flows. It's what everyone talks about, but I think people talk about it more as a surface level concept and not really understanding what goes into the statement of cash flows. So I'm going to use my own trucking company as an example. So I will give you a unique insight, a sneak peek, a real business viewpoint, vantage point of statement of cash flows. So I'm going to show you my company, Route 20 Trucking Company. I'm going to show you my actual QuickBooks page. And I've got my statement of cash flows pulled up here. So without further ado, my name is Zach Pasquarello. I'm a certified QuickBooks Pro advisor, and I own Harrisburg Bookkeeping. So I'm just going to jump right into it and talk about statement of cash flows. And I hope this video is recording. It looks like it's buffering in the bottom right hand corner for my live feed, so if it's not working, then we'll try it again, but I'm going to pull up here my QuickBooks. And I also share all my videos on YouTube, so if you miss it on Facebook, you can search for my name, Zach Pasquarello, on YouTube. Find all my super interesting, extremely exciting QuickBooks tutorials. So it's not the most exciting thing. It's not luxurious. It's not sexy. It's not fast and exciting, but it's necessary. And every business owner needs to understand your bookkeeping and your accounting. So we'll jump right into it. Okay, so here is my trucking company, Route 20 Trucking Company. Started in 2021. And as you can see, we'll just jump right into it. So, a couple things to note here. It starts with your operating activities. So this is why it's really important to have your bookkeeping, your QuickBooks up to date. So you start with your net income. You can choose the date. I have here January 1st through July 31st. So it'll pull all of your net income, your revenue, minus your cost of goods sold, minus your expenses, will get you your net income. I'm not going to go into that right now. If you're trying to understand statement of cash flows, you probably already understand net income. So as you can see here, the first 7 months of my business, I have lost $4,000. Okay, so negative $4,000 is my net income. But that's not the true amount of cash. Obviously, I don't have negative $4,000 in my checking account right now. So we need to add and subtract a few things. So we have three categories: operating activities, investing activities, and financing activities. So typically here with operating activities, we'll focus on non-cash activities like depreciation, and then any changes in your accounts receivable, salaries payable, interest payable, any expenses that might be accumulating as current assets and current liabilities. So I don't have any inventory in this company, but this is a good example. So let's say you go to your local, whatever, Alibaba, the website, and you buy $1,000 worth of inventory. That will not show up on your net income. You're going to spend $1,000 and you're going to increase your inventory by $1,000. That's not an expense. It's not cost of goods sold. So we need to capture that in your statement of cash flows. So as your inventory goes up, you need to subtract that from your net income to capture the spending of cash. Same thing with depreciation. So this $474 is depreciation on my truck. I subtracted that from my revenue to get to my net income, so I need to add it back into my net income. So you add depreciation. These credit cards here, any outstanding balance you have on your credit card, you add that back into your net income. So as of July 31st, the balance of my American Express credit card was $5,000, and the balance on my Capital One credit card was $1,700. So those are expenses that got subtracted from my revenue to get to my net income, but I never spent cash on it. So you need to add it back to your net income so we can understand the true cash flows during this time period. So we have our net income at negative 4,000. We add back depreciation. We add back current liabilities, increases in current liabilities, and we subtract increases in current assets, like increases in inventory, increases in prepaid insurance. So if you pay for 12 months of insurance this month, you're going to be spending thousands of dollars, but you're not going to be capturing that in your net income. So you need to subtract that from your net income. And all this being said, I just kind of want to show you that QuickBooks can do all this for you. So you don't need to understand how to calculate any of this. The number one takeaway from this is you want to have organized books so you have a true statement of cash flows. And number two, you just want to be able to briefly, quickly understand the operating activities, the investing activities, the financing activities. Understand the big picture components that go into your statement of cash flows. That way when you look at it, you kind of know what you're looking at. And this is just one example. This is one company. This is my company, Route 20 Trucking Company. So your company is going to be completely different. But as long as you have accurate books, and as long as you have a broad understanding of accounting, you should be able to pull your statement of cash flows directly from QuickBooks and know how much cash you have or how much cash you don't have, depending. Okay, so those are your operating activities. So net cash provided by operating activities. So we take our net income and we subtract depreciation, we subtract increases in current liabilities, we add increases in current assets, and vice versa. So a decrease in a current asset, you would subtract, and a decrease in a current liability, you would subtract. Okay, investing activities. So this is long-term assets. So typically what would happen, let's say, so you can see here I bought this truck for $28,000. So typically, you got two ways of buying something. You can either use a loan or you can use cash. So in this example, we'll say I use $28,000 of cash to purchase this truck, but that's not going to show up on your net income. It's not an expense. At least it shouldn't be. Machinery, equipment, buildings, you have to depreciate them. It's not an expense in the current period. If you go out and buy a house for $100,000 cash, congratulations, you have a lot of cash, but you do not have a $100,000 business deduction. So let's say, for example, I spent $28,000 on this truck. I spent that cash, so I need to subtract the value, the book value of this truck. I need to subtract that from my net income. Subtract that from the net cash provided by operating activities. Because I spent the cash to get the truck, but it's not reflected in my net income. So if you have an increase in a long-term asset, you got to subtract it. Same concept here for financing activities. Probably 99% of you are not dealing with equity, stocks, bonds, but you are probably dealing with loans and mortgages and notes payable. So imagine this. Imagine you take out a business loan for $22,000 and the bank deposits $22,000, or maybe a line of credit deposits $22,000 of cash into your checking account. So you've just received $22,000. That needs to be reflected on your statement of cash flows. So for this example, we add the $22,000 loan into our net income, into our net cash for financing activities. Because if you receive a loan, that's not reported as income. It's reported as a liability. So you add that back into it. So an increase in long-term assets will decrease your statement of cash flows. An increase in long-term liabilities will increase your statement of cash flows. Which, if you think about it in terms of cash and loans, it makes sense. You take out a loan, you receive the cash goes up, loan goes up. And then lastly here you have owner's investment. So I have put $7,000 of my own cash into the company. That's not reflected in your net income. So that needs to be represented on your statement of cash flows as an influx of cash. So to recap, net income plus depreciation plus an increase in current liabilities, the credit cards, minus an increase in your fixed assets, purchase of a truck, plus the truck loan, plus owner's investment will get you cash at the end of the period, $4,000. So this cash right here should be an accurate representation of everything that's in your checking accounts and cash on hand, whatever cash accounts, checking accounts, cash equivalent accounts you have in your QuickBooks. This number should be accurate, and it should give you a good representation of how much cash you have and how much cash is flowing into and out of your business. So the main key takeaway here, number one, make sure you have accurate books. Make sure you're reporting your loans and reporting your fixed assets and reporting your credit cards, and make sure you're accounting for depreciation. You can account for depreciation all at once at the end of the year, but I would recommend account for it on a monthly basis. That way you can understand your accurate profit and loss. Because if I wasn't accounting for this depreciation on a monthly basis, I would be missing $474 of an expense on a monthly basis. So number one takeaway, have accurate books. Number two takeaway, just know that this feature is available for you inside of QuickBooks. As long as you have accurate books, you can pull your statement of cash flows at any point. So I hope that was helpful. Hopefully you guys are able to understand statement of cash flows a little bit better. If you have any questions, if you want to review this for your own business and your own QuickBooks, please reach out, contact me on Facebook, watch my YouTube channel under my name, Zach Pasquarello. Find me on harrisburgbookkeeping.com. Find my Facebook business page, Harrisburg Bookkeeping. And I will see you all in the next video.